Good afternoon, ladies and gentlemen. It is our 3 p.m. Tuesday short webinar, and normally on Tuesday afternoon, 3 p.m., we will tackle a easy topic, something that can quickly register with your mind when I say it, and then just give you that general knowledge. Then you can take it and listen to the buzzword and then use that when you work on your 2025 tax return. So this is tips and traps for 2025 tax season. All right, let's get going. You already see the topics we have here. And before we dive into the content, I always want to brag a little bit about our company so you get to know us. And our company's name is communitycpa.com. And you can see that on our website. This is a screenshot of our website for the contact page. So if you click contact, then you will see this page. And you can send us a message if you have any inquiries. But on top of the function bar, you see you have that on board with us. That is a button you click when you are not our client yet, but wanting to be our client, because that is the portal for you to upload your information or the notice you got from IRS that keep you lose sleep. Then you just upload that 24/7. You can upload anytime. We have people, we have system that would monitor what's in there. So we knew exactly when you upload it, and we'll get back to you with the information you put on that portal. And of course, you can also see the appointments button. That is when whenever you felt like, okay, I want to talk to Ying, and I wonder what is her schedule is like. Then you can go onto appointment button to select me and look at my schedule, and you can also, of course, right there purchase a appointment with me. I will get the question answered. If you got me online or our other partners online, we did not answer your question while you paid a fee, we refund that to you. But I will tell you that we have never ever done the refund because no one ever felt we did not answer their questions. So we always, we have high standards here, and our team are highly skilled, and we will be able to answer your question. It doesn't really matter what kind of question you have. So of course, the other three buttons, pay invoice, obviously that's where our client paying our bills. Client portal is our clients would log in to see all the works and the account they have with us. And payroll portal is where clients are uploading their payroll information to run their payroll. So this is kind of our overall structures on our website. We also have a YouTube channel where you can subscribe to our channel and watching our videos. We have more than 1,400 videos on online. All of these videos answers questions. We don't do entertainment. You're not going to see, stories, fun things, but you will see the most relatable tax questions that you have in mind. Because we serve largely, we don't have clients like Donald Trump or Elon Musk. We have clients who are regular folks, So if you have a business and you're running your business, couple $1 million, you make money, but you work hard, you are my client. And I can help to make sure that your tax bill is efficient. And I'm not saying that, oh, you don't pay taxes. If you make a lot of money, paying taxes is reasonable. We should pay taxes when we made it, but you should not pay tips to IRS. You should not pay taxes, and you should not pay taxes while borrowing money from the bank, saying that, oh, I don't have money to pay taxes, I need to borrow money. If you are talking like that, your taxes was not done properly. Our tax system do not overtax you so much that you don't even have money and you have to borrow money. So with that said, we have a principle we follow, and we'll make sure that your tax filing is accurate and also done correctly, right? All right. So these are the 2 books I wrote so far, and I have 2 more to come. And this is our disclaimer page where we say that the content is free and you take it as you want, but just make sure that you are the one responsible for implementing those knowledge. If you really need us, of course you engage us and we'll be here for you. Now, let's get to the content today. So let's just do a quick overview of 2025 tax year tax filing. Right now is the time to do 2025, right? The federal income tax return for 2025 is due on March 16 for partnership and S corporation. Those are pass-through entities. Normally it's March 15, but this year, March 15 is a Sunday, so the due date is March 16. And April 15, 2026 is for personal and a C corporation that with a year end in December. So C corporation, you could have a different year end, so the due date could be different, right? If you end on December 31st, then your due date is April 15, so that's like 3.5 months, right? Going in to file. So if your C corporation year end is November, then it's March 15. This year would be March 16. So that's kind of how you calculate that. Nonprofit due on May 15. If nonprofit ends the year on December, the tax due on May 15. And you can request extension. Okay? If you can't meet those timelines, you file extension. But extension just extend the reporting part of it. Does not extend the time for you making payment. So especially for like a nonprofit or S corp and a partnership, you don't make payment unless you have, EPTP payments, but you don't make payment. So those are the one you do extension is 100% extension. But if you do 1040, like your personal tax return extension, you want to get the taxes paid before you do extension, because extension doesn't help you to save the penalty that the tax you owed, just so you know. Due date may be shifted on the weekend holiday you see this year, March 15 become March 16. That is, you understand. So that's overall, right? So get organized early. It is a message that we want to give you right before we lay out the tips for you, right? So we want you to know that you want to gather all your tax documents before you really sitting in front of the preparers. And actually, sitting in front of the preparers to do tax return is really not a good idea. Maybe I'm thinking that if you just have one W-2 and 5 little kids, a family, very straightforward, there is nothing else in your family, of course you can go to Vita Place to do the taxes for free, or you can go to HR Blog to sit in front of the tax preparer. But from our practice standpoint, what we know at Community CPA, we know that we normally do not do the tax return preparation in front of our clients, because we want all the tax documents to be gathered first. So getting organized early, collecting all of your payments and everything you know that you need, and making sure that you have all of that, then you submit. And missing or correcting forms that lead complications in tax filing. Sometimes even your financial institution sending you amendment forms. So that just, you cannot blame them for sending the amendment because they made a mistake. They have to change. So I always tell folks that normally no one, if you file 1040, no one should file 1040 before the end of February. The reason I say that is because a lot of forms could have a follow-up amendment to you. Then if you filed, you just kind of got yourself into complexity that you don't need it. So the IRS has this machine. The IRS knows what you should be filing. For example, if you got 1099B, which is the investment document, and it says that you had a capital gain of $5,000. So you got the first version of it, you went to file taxes, and you did it. But the financial institution later on and filed an amendment saying that your capital gain is $10,000. But you already filed with the first one, so the IRS don't care whether it is other people causing you delay or it is you. So you have to file amendment, right? You have to change your taxes, refile it, and if you miss the due date of April 15, 2026, then you end up paying penalties on all of these things that you did not pay enough taxes. So it's really, the IRS knows. IRS will not let you slide. They got the 5,000 first, then they got another copy showing that you are 10,000. So IRS knows to drop the other one, assess you on the 10. So you cannot get away from it. Our electronic system, our IT, all of these IT development for the last 2-3 years really kind of take away individual creativities. Like if you got paid somewhere and you bet it's already at IRS, they know it. And unless you know that they did not report you to IRS, and you cannot assume IRS don't have it. Even as a landlord and your tenant could issue a 1099 rent to IRS to tell IRS that how much rent you got from them. And what does IRS do with that one? The IRS actually, in their system, they're waiting for you to file that 1099 rent and separately into your tax return. You may say that, I filed a lot more than that 1099 rent, so I'm okay. No, you're not okay, because you're supposed to list that 1099 rent separately. So IRS see it matching to the other one. Otherwise, IRS believes that what you reported is what you got, then you forgot about this 1099-R, even though you think it's part of it, but IRS don't think it's part of it. So those are the things why I say you want to organize it, giving enough time for the system to correct itself, then file, and don't really rush, right? Now let's go to tips. So tips, filing tips for individuals. So what kind of filing tips do we have for individual? And we want to say to you that do electronic filing, do direct deposit. And don't try to, mail your return manually. Don't try to, get a manual check from IRS. And we'll mention that IRS is going away, IRS is eliminating paperwork right now. So, as of since September 30th, 2025, the IRS had started the process to eliminate paper check. That's what they said. The paper check still possible, but it is becoming for special circumstances. Okay, and you can check irs.gov to see what are the exceptions. Otherwise, you need to do direct deposit because they're not giving you checks by checks. Okay. Review your withholding and estimate. This is also very important. When you file your taxes, make sure you give your preparer all the estimated tax that you have already paid. Not only you have already paid, you also need to give to the preparer when did you pay each of the payment. That's very important because penalty is calculated based on the date you paid. Then, of course, withholding. You say that, my W-2 is holding for sure is correct. I know it's correct. Why do you have to give this blank default trust to any paper that you're getting? So it is your own W-2. You know exactly how much you get paid each month and each time. Why can't you just do a rough calculation to make sure the withholding amount is correct? Because that withholding amount, it is your money. Okay, if it is wrong, you may be short of the money. So make sure your withholding is correct. Make sure your estimated tax you already give to your preparers with the amount and the time you paid, right? IRS never will send you an email saying that, hey, or a text message, hello, dear taxpayers, you are, short of $10,000. Please make sure you pay. IRS don't do that. And this is really, IRS only mail you a letter. They don't do email, they don't do text. But in the future, whether they would or not, I cannot say. I can say for sure it will be available in the future, but it has to be in such a secured data exchange format. I don't really know how that would be developed, but for right now, you would not get any emails and taxes from the IRS. So if you do, it's a spam. You can automatically believe that it's a spam. One other thing I want to mention to individuals is nowadays there's more and more people, more people working from home, more people moving from one state to another, or having jobs that cover several states. So you want to make sure that you look at your state tax, you look at your W-2 or 1099 that related to the state, making sure that your withholding is correct. If your residence is in Texas, you should not have any state withholding, right? So if your residence is in Minnesota, you should have state withholding. So just make sure that you look at the state taxes, the state W-2, making sure that that's done correctly. If you have a multiple states on your W-2, then you want to make sure that you got W-2 with the federal and with multiple states that are attached to it. So when you do your taxes, and you will need to file multiple state taxes. All right, another tip. Another tip is plan before filing your returns. Do not make decisions right in front of your tax preparer. Submit your document first, have them do the draft first. And then when they finish the draft, they can send you a copy of it, or you can come to the office and read the draft with them, right? So just really understand you need to leave people with time. You don't want to sit there and wait your tax preparer to get things done, because that's a quick thinking on your part. It's also quick thinking on the preparer's part. It can done quickly, but can also miss something that with time that should not be missed, but you do miss, right? So you want to make sure that you maximize on deduction and a credit. Deduction would be itemize your deduction, or standardize your deduction. This is, normally the tax preparer should compare these two for you to see which way is better. Then of course you have other credit that's related to your retirement account, related to your HSA account. All of these things should come into play, and those are the things tax preparer should really pay attention to. You want to make sure all your income is coming. Like the example I gave you, you may be having a couple houses for rent. One of the house gave you a 1099 rent. The other house didn't. So your combined rent was $12,000 a year, and separated into each house. But in this case, because one has a 1099, you need to report that 1099, and then instead of reporting the $12,000 in total, you report the balance of the $12,000 minus your 1099. Makes sense? So you want to make sure that you coordinate with what IRS received on your behalf, and you cannot be assuming, IRS don't know, I'm just gonna be honest, I will report everything. It is not dishonesty issue. It is the mechanical issue. It is how the IRS systems work with your tax preparer's data. When the data goes to IRS, they extrapolate the data, they fit into the bucket. If they don't see it in the bucket, you get a CP-2000. You didn't pay your income tax, right? All right. On the business side, what I really want to say is before you file business tax return, you must have income statement and a balance sheet. Some of our tax preparers goes, oh yeah, I can write it down. I know exactly what my business makes. I'm going to tell you I made $200,000 income sales. And I also going to tell you that I have this much utility, that much. And all of the number the client gave to us is rounded number. Oh, $2,000 on utility, $500 on water. Oh, property tax is almost like $8,000. Put $8,000. So those are those are not the best practice. It's irresponsible for the business you do. And let me tell you the truth about it. You felt that's what you are doing. You know that is your number. Do you know that majority of the client who does this kind of guessing, and they are over-reporting income and under-reporting expenses, most of them. Because our mind works in the way that we want to protect ourselves. And the folks think that to pay more taxes is a good protection for them. That's not true. You don't want, whether you pay more taxes or less taxes is even irrelevant to a certain degree. What you want to make sure is that you're doing your tax correctly. So having an accounting system in place and give yourself a general ledger, profit and loss, and a balance sheet. When we file your taxes, and our tax team actually would review, would look at your financial statement for common sense analysis. If we see you running a restaurant, but your cost of goods sold is like 65%, you know that's not right. So we will say to you that what's going on with your cost of goods sold is out of the industry norm. Can you take a look at it? You know, we will do stuff like that because we do have so many clients under our belt. And over so many 10 years, we have our experience accumulated inside of our firm, and we knew what is normal, what is not normal. So with that said, you want to have your record prepared, planned before you file your return. All right. The next tips we have for you is be aware of federal tax law changes. No federal tax law changes is step number 1. For example, you want to be aware of bonus depreciation. It's all over again, right? Section 179 increased. Interest expenses, you can deduct more. So all of these things, and you want to know. You just, you don't have to know that, oh, what exactly increased and what is exactly the limitation. You just want to make sure that you know the concept. So when you go to your tax preparer, if you have interest expense on your ledger, on your business book, and you want to talk to your preparer, tell them that, let me know if I cannot deduct my interest expense in full, because you know there's a limitation. So I just really want you to get to that level and just know the buzzword to say. Did I qualify for any bonus depreciation this year? So do you think is Section 179 applied to me or not? So those are the things you need to know, right? And the inflation adjustment on standard deduction that increased our standard deduction. So those are the things you look at your 2024 tax return, look at your 2025 that was drafted by your preparer. You want to make sure they got the right number on it. But majority of the tax software are okay with this type of programming because it's not that hard. It is really just putting in the correct threshold, then the system will pull the number out, right? So it's not super hard. But what super hard is actually when the federal and the state doesn't do the same thing. So I will cover that on the next slides. But here, the SALT deduction rule remains subject to income limitation and the federal guidelines. So you know that when you make too much money, some of the deduction you cannot enjoy, right? When you make too much money, you don't have your child tax credit anymore. When you make enough money and you don't have earned income tax anymore, so those free money that single mom with 7 kids gets, you don't get, right? So most of our clients, we actually, because our clients are business clients, so we seldomly see that situation happens with our clients, but we know there's plenty of people needing that kind of understanding. So when you see someone with a lot of tax refund back, they don't make a lot of money, but they got a lot of tax refund back, obviously they qualify for that, right? They're low income, level folks, they qualify for assistance from the government, so that's why they're getting it. But for folks with business, sometimes it is about what I said, plan. You can plan, then you can put all of your medical expenses 2 years into 1 year, so that gives you more deduction. So there are so many things. I'm just giving you kind of examples, but you can definitely, plan early, then make that worth for you, right? Certain purposed or newly enacted provision, such as tip income deduction, okay, that applies to specific taxpayers. Overtime payment apply to specific taxpayers. So those are really things you want to be aware of. If you are somewhere working in the restaurant, you got tips, you got overtime, man, you need to look into your taxes to see whether you qualify for having them all free to you, up to $25,000, right, for tips and overtime. But you can get a lot of free tax income to yourself. So just be aware of federal tax law changes. If you want to know more about it, on our YouTube channel, we talk so much about OBBBA. So those are a group of changes that happen in 2025 after President Trump take the office. So you want to look into that. Then the state tax differences matters. This is another tip we give you, because not every state follows the federal taxes. By large, Iowa is actually a state follows most of the federal law changes. There is one they didn't follow. I have an example here for you. So you kind of understand that when you are doing your tax return, you did your federal, your federal law changes, good job, and thumbs up for you. But you also need to know whether these changes are actually applicable to your state tax return. They may not. A lot of tax softwares, the one that is kind of, didn't have that much of a manpower or knowledge to really make it very deeply correct. Those software, they actually, if you finish your federal tax, you ring that into the state, they make mistakes very often. I cannot tell you how many times we have seen mistakes on the state side. Too many. A lot of softwares are not having time, or they just simply don't do. So they leave that with the tax preparer. But if your tax preparer is not very sophisticated, they are green to the market, they're not going to catch that for you. Then you will make a mistake on your state tax return. Then the state will give you a letter. They will penalize you. The drama is just going to go on. And I give you one example here. Iowa non-conformity with federal government on the Section 179. Okay, so that Job Act of 17 increased the federal Section 179 expensing limit to $1 million. Iowa did not conform to it and did not change for tax year 2017. Instead of using the lower limit, okay, $500,000. So as a result, in 2017, when taxpayers doing their taxes, if the software didn't really give them the warning, what they did for $1 million. So the state will come back say, nah, you're wrong, and you over-deducted, and we need to get you more income. You need to put more state taxes. So that happens a lot when the state not in conformity with the federal law change. But you can't even complain about that, because the state has a state agenda. They want to do things on the taxes to produce their revenue there. So California has one of the toughest state board, franchise board. They make the rules. They are largely not in conform with the federal law changes. So those are the things you need to know. So if you are in those states who are very has a strong personality, and then you need to make sure that your state taxes is right. So when you file state taxes, you really need to work with the firm with the size, so they understand what your state is doing, then they're doing it right. It's very important. So that's a tip. That's a tip for you. Reconcile 1099-K and the third-party reporting. More taxpayers going to receive 1099-K. Remember 2025, we still have this $600 threshold. In 2026, it will be $2,000. So that didn't happen yet because we're doing 2025 tax return. So you know that 1099, all of these things can come just for you made $601, right? So you want to make sure that you know all of these third-party reporting is available to you, and you want to reconcile the amount to make sure that's really what you got. Because sometimes you get the 1099, that's the total, but the person who issued you 1099, they took half of the amount already from you. So you want to reconcile to see what they reported, what you really got on your bank statement. The difference is their charges. You want to reduce that so you don't over-report income, right? That's a tips for you. All right. Now we can turn into traps. There's a lot of traps. So common 2025 filing traps to avoid. Rushing without document. Don't do that. And you want to make sure you got all of your 1099 before you rush. Otherwise, you file amendment. Okay? Incorrect reporting, for example, missing income, you are inviting IRS to audit you if you are missing income. But how do they know you're missing income? Because someone sent 1099 to IRS, you did not report. But how do you know what IRS has? So at our firm, we have a data match program here. And if you come to our firm, we data match your data. That way you know what IRS has on you, and you know that how to report your taxes. So mathematical and the data entry errors is number one mistake that IRS see. So if you ask IRS what kind of mistake you see on most of the tax filing, the number one is mathematical error and also the data entry error. So you may say that, well, the tax form calculated itself, there's no way there is a mathematical error. You'd be surprised. It is not because they don't know how to add 1 + 1 = 2. It's because they forgot to put the add sign. So 1 and 1 are all there, but they don't add. Okay, that is the kind of mistake you have in the programming. Of course, you want to be aware of the scammers and the ghost preparers. When you file your taxes, the IRS came back to your CPA firm, goes, you already filed your taxes. Oh yeah. You got a ghost preparer who already did your taxes. Then you need to figure out what was filed and how did that happen. There's a filing you can do with IRS to claim that you're being spammed. So all of these things, right? So make sure you do not end up paying too little of taxes when you file extension. I want folks to pay all the money you need to pay by the time you file extension. Don't worry about paying too much, just because if you pay too much, we file taxes, IRS pay you back, right? But if you pay too little, you owe more taxes by the time we file your, on October 15, we file your extended return. Boy, the penalty gonna come to you. Interest gonna come to you. So try not to do that. Always pay IRS, make them happy first before you think of anything else, right? CPA sees frequently the following mistakes. So I'm just going to run down this list for you. We have almost 7, 10, 13 of them. Okay, so the first one, incorrect basis tracking for stock, partnerships, and S corporations. Absolutely. This is something a lot of preparers don't understand that either. So they let the machine drives it. But if you take your tax return from one tax preparer to another, another tax preparer don't understand the basis. The other tax preparer probably don't even put in the right basis for you. So everything else is gonna start all over again, and your basis is gonna be wrong, and that happens so often. So when you change tax preparer, I want to make sure that you're changing from a good one to a better one, but not from the best to a better one. Does that make sense? Because the knowledge comes with price. Yes, you can pay very little to get a really good CPA. You are very lucky, but most likely the price you pay represents the knowledge base of that person. So with that said, you want to make sure that your basis tracking is correct. If you don't know what I'm talking about, you just write it down. And when you go to the new preparer, or when you come to the preparer, you say that, can you make sure my basis tracking is done properly? Can you show me what you did? That will help them to do that so they don't forget. Number 2, unexpected net investment income tax, 3.8%. Yeah, some people goes, what do you mean 3.8%? Yeah, this is like rich people, I wouldn't say rich, highly compensated people's additional tax, 3.8%. Generally speaking, over $400,000 AGI, you for sure pay 3.8%. So this is additional taxes that implemented by President Trump 1.0 term. So that came in at that time. So it has always been going on. So just in case you don't know, now you know. Alternative minimum tax, AMT exposure, that is still exists. So some of the deduction you think that you can deduct, but the AMT goes no. So just like your Schedule A, you cannot deduct, you cannot deduct unlimitedly. The AMT will come in to limit your deduction. Misunderstanding passive activity loss limitation. So this is another big one. So we always see that folks are, they have a 1065 tax return, and the one partner actively work in the partnership, the other one is a passive investor, but the tax return was done wrong because they marked everybody active. So everybody was paying self-employment tax on that. Actually, one of them should be passive activity. And if they have losses, should subject to passive activity loss limitation. So there's a lot of reasons why the passive, active, these type of things are a buzzword, because it's applied to taxes very deeply. So I want you to understand that and to know, and you would come across that when you are in the 1065 and the Schedule E situation. Okay, failing to meet safe harbor rules for estimated tax. Yes, if you owe taxes last year, you owe taxes again in 2025, you're going to pay penalty. Okay, because you fail to meet safe harbor rules for estimated taxes. That safe harbor rules is 90% of the amount you owe, you need to pay. So make sure that you actually pay enough estimated tax. State filing an inaccurate return by assuming conformity with the federal government. Your system assuming it, so you did too. Okay, not, I know it is not, a lot of people are not very sophisticated. Some tax preparers, they are just very good computer operators. They don't really know the tax rules. They don't understand how deep the thinking should go. They just finish your federal, then turn into state, everything populated, they're done. They don't even spend a minute on the state. That is so wrong. That is just not right. But, as a taxpayer, if you are not aware of that, if you are not understanding of the conformity issue, then you may not think that way. So did you ask your tax preparer to know that, is there any difference between federal and the state treatment on the items I have on my tax return? Did you ask that question? You didn't. Then you should, because your preparer will tell you, oh yes, your state is in conformity with all of the things that you have on your federal tax return, so you're good. Or they say, yes, you're right, that's why you're paying more taxes in California return than the federal, because they did not in conformity with the bonus depreciation. So those are the things we like to mention to you. These are traps, right? The software the preparer is using was not updated with the new tax law regulation. That's a big one. That's a big one, folks. When federal government is kind of unstable, they have all these executive orders, and then the taxes, and things are changing, right? When stuff like that happens, the tax software system, the tax software company, they have their research teams and implementing these changes in their software. But if they don't have enough labor to do that, or they're just small scales and they don't have people, or their programmers are all in India and they did not know all the rules or are not sensitive to what changes, your software could be lagging. And when your software is lagging and you're thinking that, oh yeah, I did my taxes, there's no errors on my taxes, I must be correct, you're wrong. And you need to know it more than what the software presents to you. So I just want to embed that thinking in your mind so you don't trust that whatever come out of computer is the truth. No. A lot of things come out of computer is false, especially in today's world. Even AI can give you false answer if you don't prompt AI to be a nice personality. The AI can be mean. If you portray yourself, unethical, just tell AI give you an ethical answer. It will give you. AI is a personality. Whatever personality you give to them, they perform that way. So if you tell them, only look into IRS.gov, don't look at any other sources, give me the answer, then I trust that answer, right? All right. What else in the trap section? We did this one. So our next one is workers' misclassification. That's a big one. So when you are doing your tax return, if you got a lot of sales and if you got some profit, but your payroll is zero, you have problems. You may say that, well, I paid everybody contractor. You have problem. So that is workers' misclassification issue. Reasonable compensation for owners. You are a business owner. Your business is a couple $1 million. And you have such a big K1 distribution, but you pay yourself $24,000 a year? Are you kidding? That is a reasonable pay issue. You want to be reasonable. The prevailing wages are available at Department of Labor's website. Just go look for it. Look for the title of your job. Look for your area. See what they say how much you should pay yourself. Don't just go for the minimum pay. Oh yeah, I work for myself. I can be paid $2,000, $1,000 a month. I would still work hard. But that's not reasonable. So reasonable pay is required for S corporation. Of course, payroll tax deposit. If you're running cash shortfalls and you lose, you make deposit, you fail, the IRS didn't get your payroll taxes and you didn't pay, but your QuickBook, you didn't capture those. So on your financial statement, still see you paid taxes properly, but actually nothing got paid because you were just not paying. Then you have huge penalties coming in. So those are things you need to pay attention to because you cannot deduct the penalty. You can only deduct the interest. And your taxes, if you didn't pay, you cannot deduct it if you're on the cash method. So there's so many things that you want to make sure, you watch those traps because IRS knows. They have a system to match your payroll tax payment with what you filed on 941. They knew you didn't pay the $500,000. Here you claim $500,000? No. And, you can say that, oh, yay, but I am accrual accounting. You can say, you can get through that for a year, but next year you still have to pay. Accrual accounting doesn't accrue forever. You still have to come out of cash to pay it, right? So those are the things, we watch that for you when you are here with us. So sales tax, multi-state compliance, that's huge. When you sell product all over the state, when you go over certain nexus rules, you need to pay sales tax to that state. So you need to accrue sales tax payable, and you need to process your sales tax. Even if you pay it annually, you still have to have that accrual in place so you know that how much sales tax you owe, right? So those are frequently we see the financial statement wasn't done properly. Of course, fixed asset, depreciation election, that's important, whether you do bonus or you do Section 179. And the business interest limitation, we talked about it. If you borrow a lot of money and your rate is so high, your interest deduction may not be 100%. So you really want to watch that. All right, so these are all the traps I have for you. And so if you are a do-it-yourself kind of person, when do you think you need to call a CPA instead of doing it yourself? Start up a new company, you really should call your CPA. Because to set up as an LLC or C Corp or a S Corp, that has a lot to do with what kind of business you're running, okay? Significant income changes, you should. Otherwise, you pay a lot of taxes. Sale a business, a real estate, oh yeah, definitely. Otherwise, you may end up with a lot of recapture income tax and also capital gain. Large capital gain and losses, stock options, or vesting of restricted stock unit. So these are things that you're getting from your employer. You're vesting that, right? You need to know what kind of taxes you need to pay. Relocation, multi-state working, oh yeah, very important. You should have the CPA to advise you. IRS notice correspondence, know that if you get audited, the best thing you do is to hire a representative for yourself. For the worst is that you don't really know a lot of things about audit, but you're representing yourself. Because if you do, and then the end result is not so good, you come to the CPA firm, goes, hey, help me. A lot of time is too late because you already giving certain things, you already made a statement of certain things which you misunderstood the auditor's question. You answered it anyway. So those will take away the possibility to reduce your tax liability. You can schedule a consultation with community CPA to review your 2025 tax situation proactively. All right, so now here is our partners, and you can make appointment with us, engage us so we can answer your question. All right. What a long 30 minutes. It's more than 30, I'm sorry. But it is a lot of content for you. I hope it registered some importance for you. I hope you subscribe to our YouTube channel and send our videos to other friends you know, just in case they're doing it themselves, but yet you know that they're getting into complexity and they probably don't know how to deal with that. Then our firm, we are open to new clients and we welcome you to be our client and consider us when you can.